Hello and welcome to another episode of Future Gen. Well, what a wild ride on the stock market we had in the last week. Okay, GameStop. GameStop. First of all, I want to start by saying I'm not a financial advisor. This is my own opinions. Do your own research on anything you invest in, and think about if it's your investment style or if it's just a get in, get out kind of money opportunity, which I think GameStop is. GameStop, I think, is an in and out money opportunity. This is not a long-term hold. So we've been seeing on the news, we've been seeing in the papers, we've been seeing everywhere what happened with GameStop. Why is it going up so high? It was, let's look at historical here. Last week, crazy, up to $483 when obviously last 2 weeks before that, it was like a $20, $19 stock. So Wall Street beats, guys, Wall Street beats, and the Discord chat room figured out that some hedge funds were shorting the stock and intentionally bringing down the price to make a profit off of GameStop. And through the voice of the people, regular investors who don't buy on margin, because margin is very dangerous. You should invest with your own money and enough money that you are willing to lose, because this is a gamble. You don't know which way it's going to go, right? So this hedge funds were betting that GameStop was going to go down. So I did a little chart here. Let me just bring that over, right? So supposing the hedge fund short sold 1 million shares at $20, right? Because we saw just before this frenzy, this was the last solid price it had, $20. I don't know if they were shorting before this, probably, because if they figured out they were shorting, they probably shorted since it was $5 or something like that before it even reached 20. But let's suppose that this hedge fund shorted the shares at $20, right? And they're banking that the price is going to go down, right? So they shorted at $20. So their contracts are at $20, right? And they used 10 million of their own money, and they borrowed 50%, which is 10 million is borrowed in our margin. This is where the margin account messes you up, because if it went the right way, right, and the price went down to $15, then you borrowed 10 million, you put in your own money 10 million, and if the price went down, you would only have to put back $15 million and close out your account. But with these retail investors and the Discord going in the frenzy last week, a price, change of $10 could have did some damage to these people, right? But we got a price change of like 300 to max 483. So instead of paying back like 20 million, which was your original amount, if you got stuck in this frenzy, you got to buy back these shares because you shorting them. You got to buy back these shares at these prices now, 300 million when you only spent 20 million. Now give it to these people, the hedge funds, right? Because they've been in this for a long time. This is old school Wall Street, right? They don't know about the revolution of the retail investors. So they did their research and they think, okay, GameStop could be possibly like Blockbuster. Nobody's really going into the brick and mortar store anymore. All these PlayStation 5s came out with the digital option. You can buy the digital version of the games and get it downloaded right into the system. You don't actually have to go into a GameStop or something and buy a game anymore, right? So you looked at that and you probably would have thought, yeah, GameStop could possibly be going out of business. And that's why these hedge funds decided to short it. If you did your research and that's what happened. But you got to have the knowledge that it could go the other way. It could go the other way. And if they have a group of people, and once people see, because people will run, they did that, when you see somebody running, you don't really track and see what they're running from. You start running too because you don't want to be left behind. So once people start seeing this stock start moving, okay, because this stock is doing this, look at this thing, plus 131. They're not going to let me sit down and figure out why. You're just going to run in behind it because you don't want to be left out of the money making, right? So if you would, we're a future Gen here. We're holders of stocks, but this is not, I wouldn't take this as a whole, stock to hold, but I would definitely get in on these profits, take my money and run. I'll be in and out of this. I would be like, if I got in on the 25th, definitely, and I saw it go to 3 something and I bought it even at 96, I was selling. I was going to do it in and out on this stock. I'm not going to hold it, because you just want to be like, I don't want to miss out on all this money. But yeah, this was a great, it could have been like a great economic, like if it was like a finance major or a study of Wall Street, this weekend, this stock alone has to be so phenomenal. Points that's wrong here is the short squeeze. When certain brokers, Robinhood is one, decided not to let the regular investor trade this security and get in on these profits, that's wrong. And they have been opening a class action. I don't know the class action routes because I don't have Robinhood. But if you were squeezed out or you weren't allowed to trade this, I would look into it because they shouldn't stop you from making your profits when Wall Street has been making profits for years. Anyway, that's all I want to say on that. For definitions of what short selling is, guys, check out Investopedia. It will give you quickly examples, great takeaways on what short selling means, right? Margin calls, why they're going to call your margin on you, because we all know that big firms never use their own money and they're gonna use margin, and this is the case where margin backfired on them. They leverage their stuff. They don't use real cash like regular retail sellers. I use the money in my account is the money I work for, So even if I did a bet on short selling and it went the wrong way, it would have just been the money I put in myself. I wouldn't have been called on a margin. I wouldn't, I would have had to buy back the shares. That was it was a risky bet. And it didn't go right for them. And it is the power and the influence of the internet. It seemed like it's amazing. It's just been an amazingly wild ride. So I guess now, if they still taking members, everybody's going to join the Wall Street Beats bets because you want to follow them. You want to find out what they're doing. You want to know what they know, right? It's been a wild ride this week. And that's just my take on it. Again, guys, I am not a financial advisor. Always do research. Always figure out what's going on. And like I said, if you had a $20 million investment that turned you into paying back $300 million, you obviously screwed up. I'm suppose that whoever decided that this was a good investment at that hedge fund is probably fired. I mean, I don't know if that's forgivable, that, what the kind of money they would have had to invest to cover that margin and to buy back these shares at these phenomenal prices when you were betting that the shares were going to go down. Because just imagine you put in 20 million, you thought you was going to make a quick 5 million if the price went down, and then you end up kicking out 300 million or 483 million because this just went the wrong way. It's amazing. But anyway, that was my episode for today. Let me know in the comments if you didn't understand anything about what happened with GameStop or AMC or the other companies that were on the list of the Wall Street Beats bets. And see you next time.